In our strategy, we do not predict headlines. We track systems, credit, and liquidity, and we care about when policy stops working. China looks stable on the surface, but under the hood, credit is breaking, and that matters far beyond China. This episode reviews a detailed breakdown from Eurodollar University. The original analysis goes deep into the data. Our job is to translate the signal into our strategy. Bank lending in China just hit its lowest level in years. Household credit has collapsed, and stimulus failed to restart lending. Credit is the transmission mechanism. No lending means no growth. No growth means rising defaults. Household lending went from trillions to almost nothing. That is not a slowdown. That is a break. The stimulus was not about growth. It was about containment. It was designed to absorb losses, not create demand. Chinese banks are impaired. They are protecting capital. They are not expanding risk. Lower rates hurt bank margins. Banks already have hidden losses, so policy is constrained. Housing drives confidence. Confidence drives borrowing, and property never stabilized. Vanke was seen as the last safe developer. When its funding was capped, the signal changed. Containment replaced rescue. When developers cannot refinance, banks pull back further. The feedback loop tightens. Ultra-low yields are not stimulus. They reflect low growth expectations and deflation risk. Not because of confidence, because of a massive trade surplus. China is exporting deflation. Trade dollars stabilize funding. They do not fix credit creation. The weakness is still there. Internally, this looks like Phase 3 pressure. Externally, it can look like Phase 2 stability. That divergence is unstable. If exports slow, the mask comes off. Stress does not stay local. It moves through the system. We treat China as a stress amplifier, not a growth engine, and not a reliable stabilizer. We do not chase crisis trades, we protect optionality, and we wait for forced liquidity signals. Quick note before we finish. This is educational commentary, not financial advice. Always do your own research. Household credit flows, developer refinancing terms, front-end stress in rates. We do not need to be early. We just cannot afford to be late.